So if you think about what's the point of a business, the point is to earn money. And the business has had a track record of revenue and profit from the past leading up to today, let's say. And then each business also can have essentially an estimate of what the future holds for that company, the future revenue, the future profits, the future cash flow that the business can generate. Welcome to Empowered Owners, the podcast that takes you inside Empowered Ventures. I'm your host, Chris Fredericks. In each episode, I'll have a discussion with one of our employees to discover and highlight their distinct personalities, perspectives, and skills, while also keeping you in the loop with exclusive news, updates on company performance, and a glimpse into the future plans of Empowered Ventures. This is an opportunity for me to learn more about our amazing employee owners, and an opportunity for you to hear regularly from me and others from within Empowered Ventures. On this episode of Empowered Owners, which is part 2 of our 2-part series about what impacts ESOP account values, Emily and I talk about the major factors that drive EV's valuation and share price. We talk about how businesses get valued and how it is similar in some ways to when a home gets appraised, and also how it's different. Let's get to it. Hi, Emily.
Hey, Chris. So I heard a story that I want to hear more of. Snowshoeing.
Oh, yeah.
You went snowshoeing. Who goes snowshoeing? Isn't that something from like the 1800s? Who does that?
Yeah, I live in Vermont now. I don't know if everyone knows that, but moved to Vermont in the last couple of years and never been a real snow sport person. I mean, I've skied a little here and there. I think I tried to do a snowboard once and I couldn't do it at all.
Yeah, you catch the edge of that thing wrong and you're in trouble.
I can't do anything where you're going sideways, skateboarding, whatever. But anyway, I love hiking, as you hear me talk about it more than I probably should. But in the winter, obviously in Vermont, it can get pretty cold and snowy. And I tried hiking once when it was like pretty snowy and it was impossible. It was just way too much work. So I was like, oh, this is why they make snowshoes. And people in Vermont talk about snowshoeing all the time, or cross country skiing. They actually go out on trails and cross country ski the way people go hiking. So yeah, we finally got some snowshoes and got out this past weekend and did a fair amount and just absolutely loved it. It was so much fun.
That's so cool. I picture like a tennis racket on your foot with this long thing coming out the back. Is that still how it is?
I think they're fancy. You can get some fancy ones now. They're super light and they're easy to put on. And yeah, they're actually really neat. I enjoyed figuring out how to get them on. At first, I was like, I don't know how I'm going to get these on my feet. And then you figure it out, and there's a really easy way to do it. So it's fun.
Cool. I'm glad you got to go. I know how much you love being outside, and very cool. Now I've got like a thing on my bucket list. I might have to try snowshoeing. Today is a part 2 to what we introduced in part 1, which is how do I know what's in my account? Why is it there? Account value. Like we said, a lot of times for folks who have retirement accounts, it can seem like this opaque, yay when it goes up, but I'm not really sure why, and bummer when it goes down, but I have no idea what's going on. Well, that can be very different in our employee ownership environment where we can really explain and talk about a lot what influences our account value. And so this time I think we're going to dig into valuation and rate of return and stock price. Where do you want to kick us off? How should we get started?
Oh gosh. And this is such a fun topic for me being an accountant, but I also know this isn't something everyone thinks about all the time. So one way I like to analogize this topic, and also in other ways as a business, is to, owning a home, a real estate. We're talking about everyone's account value is based on the businesses that we own. Those are our assets, these businesses that Empowered Ventures owns. Similar to when you own a home, it's like it's an asset. It's something that can go up in value. It can go down in value. It's a meaningful asset. When people go to sell their home or buy a home, a lot of times there's going to be an appraiser involved. So someone who is hired, who's an outside kind of expert in home values, and you bring them in and they ultimately determine kind of an estimated market value for that home. And that influences what you can sell or buy it for. It influences like if you have a loan or a mortgage on the home, like how the banks look at the value of the home. Our businesses are really similar in terms of we go through a process every year of hiring essentially an appraiser. We call them a valuation advisor, but they come in once a year and they put a value on everything that Empowered Ventures owns. And I think that's really important for people to understand is that's the value that ultimately is directly correlated to the stock price or the share price that is on everyone's statement. That comes literally directly from that appraisal.
That's so interesting to me. All of the things that must go into figuring out what ultimately a business is worth, because it makes sense with a house. You've got a structure and a thing in a certain neighborhood with a certain amount of land, and it's all very tangible. But with a business, there's a lot that is just making assumptions that, next year people are going to buy what they bought last year. And everything's very fluid and very moving. So that's fascinating that you can put a value on a business. But of course, you'd have to because businesses are being bought and sold all the time. So, yeah, is there more that you can help us understand? How is it different with a business than with a house because you've got all these moving parts?
So, what's different with the house? I would say there's two main things an appraiser thinks about: replacement cost. So, what does it cost to go and build a similar house? Is going to be a big factor in how they think about valuing a home. They'll also ultimately their goal is to think about what is the market, what are they willing to pay for similar homes lately. So you might hear a real estate agent talk about comps. We go look at comparable home sales in the region or the neighborhood in recent memory, and kind of they'll calculate out and use some different ways of comparing those. But ultimately that those two kind of pieces of information are what they're generally using to estimate the value of a home. Businesses, again, are similar. So comps, there's actually data out there of businesses that get bought and sold. So our valuation advisor goes and finds lists of businesses that have been bought and sold in similar industries and uses that information to inform what our businesses might be worth. And then where this breaks down, but is also useful, is the idea of replacement cost with a home doesn't really translate, right? There's no way to think about, oh, this is how much it would cost to build this business again from the ground up. So instead of that, there's more of an estimate of the value of the earnings of this business. So if you think about what's the point of a business, the point is to earn money. And the business has had a track record of revenue and profit from the past leading up to today, let's say. And then each business also can have essentially an estimate of what the future holds for that company, the future revenue, the future profits, the future cash flow that the business can generate. So every year, we and our financial teams in all of our companies prepare like a schedule of the future financial performance we're expecting for each business. We will provide that to the appraiser, to the valuation firm, and they use that information, the expected future financial performance, to calculate what they think the current value of those future cash flows might be, essentially.
I love the analogy. So, a house's point is to give you shelter. A business's purpose is to make money. And so the way that we're going to assign how much this business is worth is based on how much money it is making, not dissimilar from how much this house is worth is how much shelter is this house giving, like the bigger ones are giving more. That's a really helpful way to think about it, I think, for folks who maybe haven't thought about this before. But it still sounds like a guess. Ultimately, it still sounds like this isn't necessarily an exact science.
It's not an exact science. Where every year, though, we are able to see the current year financial performance, how that compared to expected financial performance. And you could say even like a budget. So every business is going to have a budget on an annual basis, revenue and profit and cash flow. If we're hitting our budget on an annual basis, that shows the appraiser, the valuation advisor, that our estimating is actually effective and that our future estimates are reliable so that they can rely on those. Yeah. So it all fits together.
That's really interesting because me as an EVer, the longer I stick around and the more I'm an EVer, I might start to learn about my company's revenue and profitability and cash flow, and to understand that it's really important what our budget is, what our projections are, and that we meet or exceed those, because ultimately that's what this appraiser or valuation firm is using to determine what our business is worth, which is what is determining what my shares are worth. Is that a good segue into shares?
Yeah, that's a perfect summary. And the way it goes to shares is Empowered Ventures is a corporation. Corporations have shares of stock. That's how corporations work, is the owners own shares of stock. Our ESOP owns 100% of the shares of Empowered Ventures, and we have 1 million shares. It's actually pretty simple. There's 1 million shares of Empowered Ventures stock. Whatever our share price is, the total value of Empowered Ventures divided by 1 million. So that gets down to like a per share value. And then on each person's statement, it's going to say, here's how many shares you have of Empowered Ventures stock, and multiplied by this per share value.
That's really simple. I had never heard that we had 1 million shares in our corporation. There's a cool thing. That's easy math. Like, you get the share price and multiplying it times 1 million, and that's what the valuation firm thinks we're worth. Very interesting. So then what is a rate of return, and how does that factor into all of this?
Yeah, so there's rate of return on like a share price. So, well, rate of return would be a couple different ways to look at it. You could take our share price, and however much it goes up could be considered a rate of return. So if our share price is $80 and it goes to $100, that was a $20 increase. That's a 25% increase in share value. That's probably the rate of return that most people would be thinking about.
Gotcha. What influences my account value? And this time we're talking about how we understand what all of the businesses together are worth. Because remember, we're not just looking at our company.
Every business and real estate. We actually have some real estate too. I don't know if everyone knows that. We have real estate. So the value of our real estate will get appraised every couple years too. Yeah.
Got it. And then that determines the share price. The rate of return is how quickly or not that share price is increasing. Is probably another way to look at that. And then just to tie it all together with what we were talking about last week, that benefit level is a certain percentage of our income.
Annual compensation. Yeah.
Annual compensation. Thank you. Use my words correctly. Yeah, this is just really fascinating how this all comes together. So when someone gets their statement and is looking at some of these various pieces, what should they do if they just still don't really understand where these numbers are coming from?
Ask us. Definitely reach out and just say, hey, I still don't understand. I want to understand more about what's driving these numbers and what they mean. We're happy to keep talking about it, and also maybe point to other resources. There's websites out there that talk about various elements of these topics we could point people to. Yeah, that's what comes to mind for me at this point.
Yeah, awesome. Thanks for explaining some of this. And again, congratulations on the new hobby. Looking forward to hearing about the next time that you take off cross country with tennis rackets strapped to you. Sounds like fun.
Thank you, Emily. Appreciate it.
See you next time.
I hope you enjoyed that conversation. Thank you, Emily, as usual, for joining me, and share your genius for producing this episode. Remember, we want to hear from you. To reach us, send an email to hello@empowered.ventures. Thanks for tuning in.